Hi there, I'm Sharad, and we're the second week of May. Every week, I do a fundamental and the sentiment analysis of the market so that I can make investments for myself. And in the process, whatever I learn, whatever I analyze, I bring it back over here. So that's the objective of this particular bulletin and this channel. So let's get started on what happened in second week of May. The first and foremost, as everybody knows today, is that it was a week dominated by beers, and to a certain extent, volatility was expected because of various reasons, including the elections, and to a certain extent, recovering the Chinese market and confidence building up over there, continuous outflow of money by the financial institutions. So Nifty closed 1.87% down during the week. Extensive volatility. Finally, on the last date, still recovered a little bit to close about 22,000 on 22,055 with 14 advances and 36 declines for the week. Definitely more on the bearish side. Nifty mid cap 50 being down by 1.97% to close at 13,909. And FI is continuing with the trend of what has been there in 2024. For most part of 2024, they've been net sellers. They sold for a whooping 21,619 CR, whereas what we've been observing week on week, it has been around 20,000 CR or 7,000 CR. So on an average, if you were to look at 2024, when FIs have been selling, it has been in the range of 5,000 CR on an average, I would say. But this time it was a very big amount. That's why this fall to a certain extent, although DI is compensated for it by making net purchase of 17,367, but still not as high as FIs. However, this has been the trend that FIs are selling throughout the 2024 and DIs have been buying because of significant SIP amounts. So it kind of didn't close that bad as it would have been earlier, and the total assets under management today are more on the DI side compared to FIs. So Indian markets are today more dominated by DIs than FIs. That's a clear sign of this week, and that's a positivity that's building up in this market. And of course, that means a lot will depend upon how our own economy does going forward. In terms of the sectors, FMCG up by 1.85%. That's definitely because as the volatility increases, people tend to buy something which is more predictable, and that's clearly what's visible over here. Auto up by 1.36%, energy down by 3.65%, Tata Power also being down. We're going to discuss the results. That's a part of our fundamental analysis. And financial services down by 3.23%. So that's how the markets behave during this week. Definitely a bearish week. Now, as part of this entire section, what we do is, as I mentioned, we cover the fundamental news and the sentimental news. And one of the key things about sentiments is keeping your own emotions in check. And one section that we have is about a quote from somebody who's made a mark in the world of investment. And obviously, who better than Benjamin Graham? He is also considered to be the guru of Warren Buffett, and he proclaims that, or he advises that individuals who cannot master their emotions are ill suited to profit from the investment process. The key point over here, as it indicates, that you should be able to always keep the rational on top of everything else. And especially in the times when the markets are volatile, uh, then just don't, let the emotions ride high. Keep the rational high, take the right decision, and keep riding the waves. So the waves would be rough, but only if you are able to manage your emotions and be able to ride that, you will be able to make it profits. Otherwise, you're going to make losses. And to a certain extent, right now, what Nifty has witnessed is hardly an iota of volatility that we can expect generally in the stock markets. So that is Benjamin Graham, and that's part one of our sentiment process that we take a look at one quote from somebody who's established investor. So, and then let's take a look at why did the markets fall this week. The first and the primary reason, as we mentioned earlier, that FIs have been net sellers, and this week was no exception, with an extreme of more than 20,000 crores being sold by them. But it was also a silver lining because that does indicate that there's enough money in the local markets, which is compensating for what FIs are selling and DIs are coming in investing. Valuations concern, definitely, as I mentioned, our valuations have been always on the higher side compared to other markets. And given the fact that today, from emerging markets, and for that matter, today China is no longer an emerging market, it is looking like more attractive because there is a recovery over there, and a lot of fund movement is in that direction now. I don't know what's the political impact, because to a certain extent, what's also the case was that earlier, at least on on the news circuits, so always that if China and US are at loggerheads, both in terms of economies as well as political. But given the fact that economics always wins over politics, at least we are seeing a significant amount of money moving to China. So that's in terms of valuations. I think we know for certain that there is an uncertainty because of elections, and since elections are causing uncertainty, especially for the FIs, the money is moving out. And given the fact that earlier there was a lot of confidence in BJP winning, which means leave aside the political side of things aside, there is expected stability and there's predictability in the system, given the fact that a lot of political news is hinting at a mixed house this week, this election. There is uncertainty is building up, and that's why there is outflow of money, especially from equity markets to something which is more stable. And also the fact that there might be an interest rate hikes in US, and because of that, the US dollar is strengthening and bond yields are increasing. This has made Indian stocks less attractive to some investors. Obviously, if FIs can get risk-free returns in their own markets, that's backed by their own government, they will prefer to take that rather than taking a stance in the emerging market like India with risk. So that's the reason market is falling, but still the volatility is very, very limited. It's not like there is a lot going on over there. It's fairly stable, I would say, for this kind of markets which have given so much return in the last 1 year. This is just a blip in the overall progress. So moving forward, there are lot of results this week, and that's a part of our fundamental analysis that whenever there are results, we analyze the ones which kind of give you a picture of how the economy is working. And the first one that we picked up this week was Tata Power, which indicated a revenue growth of 27% with 16,463 crores and net profit of 895 CR with 15.1% year-on-year growth. Now, in terms of the dividend, it declared a 2 rupees dividend. Power generation grew by 68% and transmission and distribution grew by 8.8%. But what is important is that from a market perspective, the analysts were expecting a growth of a profit around 950 CR, which is falling short when we look at this number of 895. So the markets were actually valuing the growth at 950 CR, but it did not give that, and that is why there is a significant dip in the stock, and this might be a buy opportunity. So whoever is looking at investing in the power sector, which is a growing segment, especially given the data center space is coming up, might be a good opportunity to start dipping into this stock. So we give a strong buy rating on this particular stock at this point in time. So that was for Tata Power. The next one was another one from the house of Tatas, which is Tata Motors. And by the way, this stock As I mentioned, that this is more about learning this particular channel, and I analyze and I send whatever I analyze, I share it on the YouTube. My son has done a video on this particular company. He's trying to understand the markets and how it behaves, and he did an analysis of why Tata Motors is good, in which he covered the history and various aspects of where the company is standing throughout based upon how it has progressed. You can check the video, it's linked in the card and it's also there in the description. He's in class 10, so it's definitely good that he's learning from me, and that keeps me honest on this. But overall, the company, if we look at the results, the revenue grew by 14.3% year on year, net profit by a whooping 222%. So definitely significant growth over there, and EBITDA at 33% year on year. Now, from a perspective of the final things, the Jaguar Land Rover thing is grown up by 11% year on year. So definitely for this segment to grow, uh, the automobile sector needs to establish itself in the luxury segment. So this is a good sign that it has grown up. The Land Rover segment has grown up by 11%, and the management expects the domestic passenger vehicle to weaken in the first of FY25, because if you look at a lot of demand that has come in the auto sector over the last few years is because of the blocked demand that happened after COVID. COVID was a period when it was blocked, then it started picking up in supply chain. So that has settled, and because that has settled, there will be a temporary blip, and then it will start picking up as the festive season comes in. So, to a certain extent, this 222% has come because of the tax credit surge given, and the overall margin, the earnings before income tax, and this thing grew by 33%. So that's a good sign. And overall, if you're holding this stock, then it's definitely a hold for long-term investors and a neutral rating for a short-term investors. So that was Tata Motors. The third one from the behemoth of the financial industry, SBI. The overall interest earned was 19.46%. So that's a big one from a financial institution perspective. Net profits also grew by 24%. So a very good sign from that perspective. And there is a announcement of 13.7 rupees on the dividend. And the asset quality has also improved because the provisions made for the for the write-offs is much lesser. So that makes it a very powerful result. And overall, if you look at the NPA, it is the lowest in the last 10 years at 2.24. So, and the management expects the credit growth at 15 to 16% in FY25, and the deposit is expected to grow at 13 to 14%. So because of that, there is a significant jump in the stock, and we maintain a buy rating. We've been actually taking a dip in the stock, and we'll continue to maintain that at this point in time. So that was the results for this week. And every week, as I mentioned, it's not just about fundamentals, it's not just about sentiments. We cover the market from both perspectives, and we run a weekly and a daily algorithm to figure out which are the stocks which are demonstrating strength in terms of the volumes, in terms of the price action. When we say in terms of the price action, what it means is that whenever the stock dips, and as it moves back, the pullback is at a higher price. So if the stock closed at in the previous week, it was at 710 at the lowest. Then the week that just the last week, it actually demonstrated that it didn't touch 710. It actually turned back positive from 730 or at higher level. So stock trade taking support at higher levels, good volumes on days when stock went up, positive trend on exponential moving averages, and any company that we analyze from a sentiment perspective is already filtered for fundamentals. So either the company is having a very good profit growth, so overall peg is in a positive direction is we make sure of that. Based on that, the list that came out from this week was the first one was escorts. It has been on our list from quite some time, but it's still showing a lot of strength, so we brought it up over here. And these are stocks which have shown a lot of strength even in this volatile week. So Escorts is one, Finolex Cable being the second one, and SMC Global, which is in the business of stock trading, is the third one. So these are the stocks that we recommend for short-term trading perspective. But whenever you trade, you should always check for the fundamentals. These have been evaluated by us, but going forward, but if you are making an investment by yourself, definitely look for the fundamentals. So that's what this week was. So we'll see you in the next week. And remember, this is just for education purpose and it's in no way an investment advice. Bye for now and stay invested with conviction. I'll see you in the next one.